Hi, Brock VandenBerg, President of TaliMar Financial. I want to first start off and say thank you for making 2021 a wonderful year. I wish you and your family a very, very happy holiday. Came into the office on the final day of the year just to reflect on what we have accomplished over the year. As you can tell, the staff is off, and rightfully so. They deserve it. They worked very hard this year to accomplish some very, very big accomplishments. So I want to first off and talk about some of the accomplishments that we had over the year. Also want to talk about some of the goals that we have going into 2022, some of the concerns that I have that next year might throw at us. Also want to thank some of the vendors that have been there for us through our growth trajectory. And then also thank those investors that have made that journey from the trust deed platform over to the mortgage fund platform. So let's talk about some of the accomplishments that we had in 2021. The first big accomplishment that we had was that we closed over 71 million in loans this year. That nearly doubles what we had closed in 2020. And actually surpasses our goal of 50 million by another 20 million. So it gives you an idea of how much we're capable of closing. We launched TaliMar Income Fund I in May. Now, consider the fact that we decided to go down the mortgage fund route in, I believe it was about the November timeframe of 2020. And we were able to accelerate the process of launching the mortgage fund with the help of the Jurasi Law Group and Verivest, launch the mortgage fund in May. Now, in May, when we launched the fund, the intention was to raise maybe 3 to 4 million, just simply because it was a new fund. We're actually closing in very quickly on raising over 10 million. Now, one of our goals going into 2022 is to get that fund with an aggregate balance of over 30 million. And I think that's very achievable. In a year, we only had one foreclosure, and we finishing the year with no 30-day late pays and no maturity defaults. The current loan portfolio, inclusive of our trust deed portfolio and the mortgage fund, is between 46 to 47 million. So there were a lot of accomplishments. One last accomplishment, and probably something that we should really dive into, is the fact that we've completely automated the loan submittal process for our borrowers and the mortgage brokers. What that does is cuts down on the amount of time of getting an application from a borrower. Additionally, it has made the process much more efficient for our underwriting staff so that we can fund loans much quicker. Additionally, we have completely automated the syndication process for our trust deed platform. I know for some they like it, for some you don't, but there are massive changes that are happening in the trust deed world. Everything is going to be automated. And if you're not going to be on the automated process, unfortunately, loans have to close so quickly these days that if you haven't automated the process, it's really difficult to remain competitive in today's market. And it is competitive out there, which is why we launched the lender portal in 2019, and we're continually updating the options that investors have. So you can still log into the lender portal. You can still view and subscribe to our trust deeds directly in the lender portal. You can also view all the information about every trust deed that we offer or that's currently offering simply by logging into the lender portal and viewing all the information there. That's why we no longer send emails out with all the diligence material, because unfortunately the process to do it doesn't allow us to move quick enough to fund the loans that we have. And then you can subscribe directly through the lender portal to those loans. And so, again, the automation process has completely changed the industry over the last 18 months, and it's going to change the industry. And I think that you're going to see several of the groups that can automate the entire process be successful, and those that are not going through the automation process are really going to have a difficult time keeping up in today's kind of where today's market is going. So let's talk about the goals I have for 2022 for the group. We've got some big goals. The number one biggest goal is that we want to close over 100 million in loans. I think it's very achievable. We've spent a lot of time and money focused on marketing the TaliMar Financial loan platform, from our fix and flip loans to our fix and hold loans to our bridge loans, and then doing some new construction loans, primarily in the Southern California marketplace, though I think our footprint will be growing throughout California and along the West Coast. Number two, we talked about the mortgage fund. Most likely the company is going to move 100% into the mortgage fund, probably by the end of 2022, depending upon how much capital we raise. Again, our goal is to raise roughly 30 million in the mortgage fund. We're going to continue to make some updates to the lender portal. You can now log into the lender portal and view all the loans in the mortgage fund. We're going to update that page to reflect details of the mortgage fund. So what percentage of the loans or what percentage of the fund meets certain loan criteria, percentage of loans in certain locations, loan type, yield spreads, that type of stuff are all going to be available to you. And what's great about that is it's going to be real time. So when a loan pays off, you're seeing it real time, just like I would see it real time through the lender portal. And then we're also going to be looking at automating the underwriting process. And so automating the underwriting process means automating the process of ordering appraisals, of ordering credit checks, of ordering property profiles. All of that can now be automated through the process. And what that's going to do, again, is create a more efficient process, lower the cost of underwriting each transaction, and just, again, making us a highly marketable option for borrowers that need to close quickly on their transactions. People always ask me, what are my big concerns for 2022? And I got to tell you, the biggest concern I have, and it's going to be an issue, is inflation. And it's not the fact that the inflation is the issue. Inflation is good if you're lending on properties that constantly go up in value. Your loan to value ratios keep getting better as the value of properties go up. The problem we're going to have is when the Fed steps in and starts to raise rates. And it's my belief that the Fed is going to be behind the ball on inflation. They're not going to be able to raise rates quick enough to tamper down inflation. So what does that mean? I think we're going to have significant inflation through 2022. And then just like as the Fed lowered the rates and inflation got out of control, my concern is the Fed's going to constantly be increasing rates. And at some point, that's going to negatively impact the economy. Rates are going to be simply too high, and you're going to see inflation come to a halt. And so we're constantly monitoring that. When is that going to happen? I don't know. I felt that inflation was going to hit us much earlier than what it did. But let's keep our eye on what the Fed does with rates. The other thing that concerns me and we're going to remain focused on is loan quality. So right now, loan quality is extremely high in our loan portfolio, which is why we have such a low default rate and 30-day late rate. But as we grow in loan volume, we're going to have to still remain focused on bringing in good loans and funding good loans. And that doesn't stop at simply when we underwrite and approve and fund a loan. As I've always said, half the battle is servicing the loan portfolio. So remaining very vigilant on collecting payments from our borrowers, working with borrowers that we see might have issues on making payments current, and then getting those loans off the balance sheet if they become problematic. So those are my big concerns for 2022. I want to do a quick thank you to the vendors that have been just a huge partner for us in our growth. Number one, I want to say thank you to Gerasi Law Firm. They're the ones that handled putting the mortgage fund together and continue to provide us the information and knowledge that we have to ensure that we manage the fund correctly. I want to say thank you to Veravest, who is the fund manager. They've been extremely important in helping us launch the mortgage fund. They handle the day-to-day and monthly financials. They're the ones that are providing the monthly and year-end statements. So thank you to the whole team over at Verivest. I want to say thank you to the team at FCI Lender Services. We appreciate you guys working so hard on our loans and making sure that you're collecting the payments and that you're responding so quickly to our requests. So thank you to the team over at FCI. Also want to thank Bitcot. They're the ones that are actually on the back end software development team. They're the ones I'm on the phone with at 6 in the morning, handling all the updates that we want to make to the software and continue to make those updates. So thank you, Bitcot, for your help. And then Endeavor Bank. John Harrelson has been a wonderful, wonderful representative for Endeavor Bank and helping us be the bank that is working with the mortgage fund. So thank you very much. Lastly, I want to thank the investors that have followed us on this, what I'll call journey into the mortgage fund. I know a lot of investors have been comfortable with the trust deed platform. It's worked up through last year. And we've really been able to grow that trust deed platform up through last year. But unfortunately, we just hit a wall. As much as we were able to automate the process of investing in trust deeds, it just simply was too much to try to bring in so many investors on any one loan. And the speed in which the industry is working now, it makes the trust deed platform generally very difficult if you're looking to grow your business. And so that's why we jumped into the mortgage fund, and we had a lot of investors move from the trust deed platform to the mortgage fund. I think they recognize the huge benefits of the mortgage fund. Number one, you're not jumping in between trust deeds. You don't have that lag time between trust deeds. Your funds are not lost or not earning interest. You're constantly invested. You're diversified over a pool of performing loans. For those that qualify, you've got QBIT, which is the qualified business income tax deduction. So only 80% of the income generated from the fund is actually taxed. The remaining 20% is a non-taxable event for those who qualify. For those self-directed IRA investors, you are not subject to UBIT or unrelated business income tax. So you can invest in the fund, and because even though that the fund is leveraged, you are not taxed on that the income generated from the leverage component of the mortgage fund. So with that, I just want to say again, Happy New Year. I wish you and your family the very best. I look forward to the challenges of 2022. And in reference to the late, great John Madden, I'm excited to enter 2022 with a boom. So thank you.